Hi friends! In today's video, I'll share 5 mistakes I've made in the stock market and how you can avoid it. So my friends keep asking me what they should buy, what they should sell, and I thought I'll make a video on the 5 mistakes that I've made and share insights which has taken me years to learn that you'll walk away in 10 minutes or so. So if you're new to this channel, my name is Kunal, and I love to study the habits and behaviors of world-class investors, and I love to share what I'm learning and discovering with the goal of mastering this craft of investing. So let's get right into it. Mistake number 1 that I've made is diversifying too much. And now this might be controversial because the common adage is that not to put your eggs in one basket. Well, there is some truth to that. It also isn't too great to have several baskets, right? So world-class investors like Warren Buffett and Charlie Munger, they focus on just 1 or 2 ideas a year. And the key lesson is that they don't diversify too much. They in fact have highly concentrated portfolios. So the key to avoid this mistake of diversifying too much is to actually be confident in your thinking, your investment research, the quality of your decision, right? If I know that I have researched, if I'm confident in what I'm doing, then I'm unlikely to diversify too much. So what I see retail investors do a lot is that they might buy, 20 shares of one company, 50 of another company, 200 of another company, and really what they're doing is they're really speculating because you haven't really done your thorough research on any one of these stocks. You're simply kind of throwing spaghetti on the wall and hoping that it sticks. And I've done that too, and I would have been better off just sticking to the stocks that I've really studied and understand. So with that, let's go to mistake number 2, which is being too timid on a few good ideas that come by, right? So oftentimes what I'm doing is studying, researching, and that takes up most of my time as an investor, right? Very rarely am I going and trading. I take a long-term view of investing. So most of my time is involved reading and analyzing, right? It's not logging into my brokerage account and actually buying or selling stocks. So what happens is when you've done your studies and you've come to the conclusion that you've found an idea that you really know that this stock is undervalued and is going to take off over time, you have to go all in that particular stock. And what I've done is that I've let fear get in the way of doing that. So I've been too timid. So I didn't lose money because I bought the stock, but I lost money because I didn't buy the stock even when I knew better. So when these opportunities come by, what I'm starting to do is really get a hold of that emotion of fear, right? Again, if I've done the work, if I can stand by my rigorous research, then there's no reason why I shouldn't go all in with a particular idea that is sound, with a particular investment thesis that is sound. Let's move to mistake number 3, which is getting carried away with my emotions and speculating. So there have been a couple of times that I have lost money in the stock market, and incidentally, those times have been times that I've gotten carried away with my emotions. So what do I mean by that? So there is a ton of noise in the investing world, right? There is reports, analyst reports, there is famous people picking certain stocks, there's a sudden crash and you jump in because you're like, this is the perfect opportunity, and you really haven't done the work or the research, and you buy something without doing that. So that is a mistake of getting carried away with your emotions. And what I've done and what I've developed over the years now is to ignore the noise. I've made a video on this topic. Check it out. It's called the number one skill you need to make money in the stock market. And in that video, you learn how to develop this skill of ignoring the noise. And with this mistake, right, of speculating and getting carried away with my emotions, what I've learned is that EQ is equally, if not more important than IQ. Yes, we need the research. We need a contrarian mind, independence of thought when we're investing. But equally important is this other piece, right? This primal piece, this human nature piece of mastering our emotions when it comes to investing. So let's move to mistake number 4. And that is, I've sold my positions quickly, right? Too quickly. So you buy a stock, you hold on to it, and then you also have to figure out when you're going to sell it. And what I've done is that I've sold my positions too quickly without having an alternative idea or a thesis where that money is going to go, right? So why sell when I don't have a better alternative, particularly if it is a high quality business? I want to hold on to it as long as I can. So there are a couple of simple questions that now I ask myself to avoid this mistake. One is a basic question: why am I selling? Are there alternatives to take advantage of the cash if I sell my position in a high quality business? And then the third one is, if I didn't own the stock that I'm planning on selling, will I be willing to buy it today at today's market price? And if the answer is yes, that I would still want to buy this stock, then I might as well hold on to it. So selling your positions too quickly is really not a good idea if you don't have an alternative channel to use that cash, right? You don't have an alternative investment to use that cash, then why sell in the first place? As long-term investors, we want to hold on to high quality businesses for as long as possible. And then finally, mistake number 5 is that I haven't sometimes been clear on if I'm trading or if I'm investing. So now what do I mean by that? So trading, the distinction is, trading is something you do that's short term, right? You might say, well, I'm going to own something for a month. I'm going to own something for a week. I don't do trading. I don't encourage trading. I don't do it very often at all. But if you are taking a position for this short term, then it's trading. But if you are investing, it's more a long-term horizon. What's happened to me is sometimes I haven't made up my mind if it is trading or investing. And the way I've gotten around this mistake is to be really clear up front as to what my investment thesis is and what my time horizon is. So if it is 3 months and if I've hit my target, and when I've hit my target, believe me, it's tempting to hold on to it. And you know, if I've already decided that it's trading, then I need to stick to my conviction and to my plan. Otherwise, it's unnecessary stress of trying to make a decision again when you already have decided what you should be doing with a particular trade or an investment. So I hope these 5 mistakes that I've openly shared and how you can avoid them helps you in your investing journey. If you enjoyed this video, please do me a favor and hit the like button, subscribe to my channel, and I will see you next time.